so I can be a better trader. When in reality, you have to tailor that thing to your you know, your risk tolerance because everyone's different. And so, yeah, this is also the perspective that traveling gives you. Is you're like, oh, there's more than one way to do something. And that's kind of the perspective I got from that London event is that obviously everyone's successful at trading. And so clearly there's something that's happening that everyone's doing correctly. And the three main points I got as a takeaway from that event would be number one, you have to have a clearly defined plan. You cannot be just discretionary trading all the time. You have to have a system that you've back tested and that you truly, truly have confidence in so you can hold through some of those losing streaks. So, number one, having a clearly defined system. Number two, working on mindset. There's a common theme between all the traders there. It was personal development is a non-negotiable if you want to be successful at trading. All of you guys will notice that if you're successful for 30 days and you've been trying to stay consistent, but you haven't been growing as a person, you haven't been like preparing yourself for when things do go wrong and how you're going to handle them, and you're not preparing yourself for the next step, then you can fall off no matter how long you've been consistent. So personal development is absolutely key in this lifestyle of constant growth. And constant doesn't mean fast, fast, fast. Constant means that you are always looking to improve. And that means putting your ego aside and understanding there's always room for improvement. Right? A lot of traders go wrong here where you're going to let your ego get in the way and convince yourself that because you've had 6 weeks of success, 7 weeks success, that this is going to somehow is guaranteed to continue. And so then you relax, you don't have to put in as much effort into being successful at trading because now you're more consistent. And all of a sudden you stop doing what got you to the dance and you end up giving some of the money back or all of it. And so number one, clearly defined plan. Number two is people say mindset, but really if I had to summarize it, it's actually personal development and commitment to constant growth. Always a student. And number three, let me see what that was. Because the risk stuff, everybody's different. Number three, oh yeah, you can't skip the process. Every single person on that stage that's made over 6 figures, or even some of the folks that have made over 7 figures trading, it's going to take years. You're going to have times where you're very successful, and then you kind of go through a period of 3 months, 4 months where things aren't going your way and you may be in a rut and you have to dig yourself out. So prepare for those things in advance because they are coming. And so they won't be as severe for you. They won't have a traumatic lasting impact, and they won't impact your, it won't impact your progress because you're not constantly stopping and starting because you have to like sit there and rationalize why you just blew all your accounts and go through this whole kind of sob period. Expect the fact that you're not going to be consistent forever. But if you have that personal growth commitment and you're constantly trying to improve, not just to improve the strategy and always messing with it. Now, once you got it down, you got it down. It's working on yourself. Okay, so I have a strategy that is very consistent and that works. I'm seeing tons of opportunity while we're here. But the mindset decision I am making is to not take a trade because the market's not at any high probability zone for me, though all the best trades are basically already passed. So now it's more of a waiting game. That's a mindset decision because the ego could tell me that because I understand my system so well, I can sit here and scalp all these little points. And on my worst days, I still fall into some of those bad habits. We're all human. But the decision to not lose money today or not give back the money I've already made today, that's a mindset decision. Got it? So those would be the three. Number one, have a consistent plan. Number two, have a commitment to personal growth, personal development, and working on your mindset. And then number three is understanding that you can't skip the journey. Experience is one of the most important factors of being a successful trader. If you want to, get to the point where you are having the results that you're seeing on social media, all these people that are wildly successful, even people in our group chat here that are wildly successful, you can't skip the steps. All right. So don't beat yourself up if it's taken longer than you expected. Everyone's timeline is different. The only people that win are those who stick around and make it work. And the only people who lose are those who give up on themselves. Cool. Put a one in the chat if we're clear to go. Good morning, everybody. Welcome back. Chart Addicts live streams. Hinok, I know you were at that event, bro. Tell him that happened. You were there. He's my witness. Okay, so let's talk about CPI. We had an inflation print come out today. I kind of have this brief summary of what happened. Can I just read this off? This is on the Chart Addicts website. Will be available after this stream. Since you guys are here, make sure to head over to fxsummit2024.com and grab your tickets. People, we are less than 40 days away from the #1 conference in the world for traders, investors, entrepreneurs. Make sure to use your promo code ChartAddicts. You get half off all tickets. That $3,000 VIP ticket is now $1,500. The $400 general admission ticket is now $200. Make sure to grab those. It's an absolute steal with the promo code. And you guys get to hang out with us, all the biggest traders in the world, those guys that you see on social media, some of the biggest institutional names, the founder of Oanda, Dr. Richard Olson. We have Bob Elliott, head of Ray Dalio's personal investment team, and now the founder of Unlimited ETF. Peter Tuchman, the longest standing broker on the New York Stock Exchange, will be our opening speaker this year for the conference. We have KuCoin, some of the largest crypto institutions, Gate.io, Bullish Exchange, Binance, and the rest. Make sure to grab your tickets. We'll see you out there. Come hang out with us in Dubai. CPI came out slightly worse than expected. However, we're back at this 2.4% range. If you guys have been following us for a while, we've been talking about the inflation and the Fed's response since COVID, and probably even before COVID, because 2019 was when the Fed first started to sound the alarms on inflation. So if you guys haven't been around, I'll kind of catch you up on how we got here real quick. So 2008, we had a massive financial crisis. The government's response was to start a program called quantitative easing and the TARP program. This was basically pumping money into the economy to stimulate it, kind of like giving a like the defibrillator shock to somebody who's out. You kind of just charge this thing up and you try to send this electric shock through the system, or try to give it a boost so that it can get back and running. Or like what is it called when you jumpstart a car? That's basically what they tried to do. So the first there was 4 major facilities, 4 major kind of pumps of liquidity in the quantitative easing program. QE 1, 2, and 3 happened between 2008 and 2012. And those basically helped to stabilize the economy, and so we don't go into the Great Depression. Quantitative easing 4 happened around 2013, 2014, and that just basically allowed the market to flow. I'm speaking about equity markets here. It allowed the market to basically have a 14-year bull run. So this combination of pumping money in and then dropping the interest rates down to 0 stimulated a 14-year bull run that we all grew up in. All right. Now, what happened is in 2018, 2019, Jerome Powell, well, this is really 2018, Jerome Powell tried to signal the alarm that inflation was starting to get high, and that if we don't start to drop interest rates, then we're going to end up dealing with an inflation crisis. Or not drop interest rates. If we don't raise rates and start to slow down the economy, inflation is going to get out of control. So in 2018, Jerome Powell tries to raise rates. Markets crash out of the sky. They punish him. The market was kind of baiting Jerome Powell, thinking he won't raise rates again after the market's response. And he said, I don't care. We have to do what's right. And he raises rates again. Markets have another 3-4 month drop, absolute calamity. So after that, the Fed realized that they can't do this. The markets basically punished them for it because no one was prepared after a 14-year bull run, after the party of a lifetime. Everybody's getting rich. Amazon's damn near $1 trillion. Apple's $1 trillion. We have $1 trillion companies. People are richer than any time in history. And the top 1% have wealth that we've never even imagined of. Elon and Zuckerberg and the Google folks. Larry, Sergey, everybody else. So Jerome Powell switched gears 2018, 2019. If you guys were trading, I was doing interviews back then, I'm pretty sure, with folks who are making like $100,000 in a day off a $1,000 trading account, trading CFDs, Forex, just full margining. full margining US 30, full margining, all these things. And the markets were so liquid that we were having a pretty volatile situation. Now, this is also the time of China trade wars with Trump, where he would get up and tweet about China. The markets would go crazy. This is also the time of, this was tariffs. This was probably close to Brexit. So there's a lot of factors going on there that happened. So we kind of switched gears, had low interest rates. We were trying to stabilize the economy. 2019, we were kind of going through a very slow phase of just, the Fed trying to inch closer to kind of raising rates. And then 2020 happened, COVID. We dropped rates all the way back down to zero. We pumped an ungodly amount of money. 33% of the total USD supply was printed during COVID. 33% of all the dollars in circulation were printed in COVID. The dollar's been around for a while. There's been a lot of money pumped into circulation over 100 years. You're telling me in the span of 2 years, we basically just inflated the whole game by 30%. That's an atrocity, right? So 2022, or 2021, going into 2022, we start quantitative tightening, which is basically undoing the facilities that Obama and Ben Bernanke at the Fed had started back in 2009. So the money printing party, 14 years, came to an end. So we had a massive drop in 2022. The whole year was bearish. And then 2023, we saw inflation finally stabilize. We saw the light at the end of the tunnel. And the Fed was like, okay, we're in the clear. We can start to think about dropping rates soon. We stopped quantitative tightening. So now we're just letting the game roll and just trying to see if the market stabilizes, which is where we've been all 2023 and all 2024. It's been 2 years of the Fed trying to get this inflation beast back in the bottle and us just kind of a wait and see. And they're kind of dealing with it symptom by symptom. So now fast forward, where we at right now is that inflation came from 9% in 2021 at the peak down to 2.4%. The Fed's inflation target has been 2% this whole time. They've been trying to slow down the economy so that 2% is that sort of long-term goal. So 2.4% basically means that we're in the clear, and that the Fed has pulled off this miraculous concept called the soft landing, where you can bring inflation down and rein in high prices, bring prices down without crashing the economy. But where's the kicker? So yes, inflation may be coming down, but what has been going up? Can somebody tell me what metric has been going up in the meantime? While everyone's been focused on inflation, what in the economy has seen a horrible, we've seen a horrible situation somewhere else in the macro. Where is it? Henoch said it happened. It's got to happen again. Henoch, Dubai, brother. I'll see you in Dubai for sure. Employment, exactly. So that's the thing. Those are the two main focuses of the Fed. They have a dual mandate of price stability and maximum employment. So they've been focusing on the price stability part at the expense of jobs. And so the soft landing means that you can bring down prices without crashing the economy. I would say if you have to get people to lose their jobs in order to bring prices down, that's crashing the economy. That's not a soft landing. Jobs are the basis of everything. Everybody here, if you have a job, you can keep spending, you can keep paying your taxes, you can keep going to the corner store, gas stations, and keep putting money in the economy. You don't have a job, you start to spend less, or you don't spend at all. If you have a fear of losing your job, you spend differently. And that slows down the entire economy. That's the basis of everything. And it doesn't show up in the economic data for another 2-3 months. Because if we all think that there's a recession coming, or people around us are losing jobs and we stop spending as much, then the retail sales numbers are not going to take a hit. Consumer sentiment is not going to take a hit until the next month when we get the reports. And then corporate earnings are not going to take a hit until the quarterly reports. And so the data comes in way later. But if we're looking at just those key metrics, the underlying things like employment, we can start to get an early read on what's really happening here. Okay. So just kind of a recap, or not recap, just a side note here on the charts. Beautiful retest at the bottom of the range. Okay. I did miss this, but it did retest that wick. So I told you guys those wicks are valid for re-entry. So the bottom of that at 204, excuse me, at 204 would have been a valid re-entry. But again, if it's not going to come back to this discounted area or down here, I'm not going to take this trade today. I'll let this thing break through our target. And actually, I would take a retest. So we've already retested here. This thing breaks back above. I would love a retest at that same price, same area of support. I would love to take a trade here to the top of the range. This would be Christmas. We get a retest of that zone, that would be Christmas. Okay, CPI summary. So the report shows inflation is moderating, so it's slowing down. Overall price increases are slowing to 2.4% a year. Okay, so it's mostly driven by declines in energy prices. You guys have seen at the gas stations, prices have started to come down. More stable food costs. Stable. They didn't say it was cheaper. They said it was stable. Core inflation, which excludes food and energy because those are kind of volatile categories, it remains slightly elevated. Why? Because the government has a direct impact on bringing in more energy or reducing the price of energy through either collaboration with oil producing partners, dipping into the strategic petroleum reserves, which is stupid, or working with US manufacturers to produce more domestic energy, which I'm not sure they're really doing. And so they can fudge with the numbers on energy. Same with food. America is a pretty large producer of corn, wheat, and a few other key things, but we import soybeans and some of these other key, like sugar, coffee. We import a lot of stuff from the rest of the world. And so through strategic partnerships and political alliances, they're able to basically fudge with these numbers. But everything else like that, like discretionary spending and non-discretionary spending, toothpaste, stuff for your house, groceries, and then the discretionary spending would be things like a new car or getting a new refrigerator or something like that. Those are a little bit less predictable and they have less of a direct impact in a free market, quote unquote. So we're in a free market, they can't really fudge with those. So core is still elevated. That's the prices that we're all seeing at the stores. The steady easing in prices benefits everyday consumers by relieving pressure on household budgets. That's true, especially because food and energy are the largest components of everyone's budget. It goes shelter is number one, and then food and energy. Correct? Unless you have a really expensive car. But it's really like, let's take your light bill, your power bill, and then take the gas station bill. It makes a huge difference in how much money you got at the end of the month. So, okay. So housing and medical care is still on the rise. And I think we've all seen this. Insurance rates are higher and house prices are rising, especially with interest rates coming down. For the broader economy, inflation, let me see what I said here. The inflation trend may signal the Federal Reserve to pause or even cutting rates as inflation cools to within its target range. This could be support the economic growth. Basically, this is going to give the Fed enough runway to continue to cut rates because the whole risk of cutting rates, or excuse me, the whole risk of cutting rates is that inflation would come back up. And so we did have a pretty aggressive rate cut with 50 basis points that we've just seen. And the first print that we have for CPI came out slightly elevated. Now, I don't think that there's a direct impact that quickly. Okay, so there's going to be a 3-month lag in between the Fed's rate cut, and then we're going to start to see the result in the inflation numbers. So I do think it's a little premature to tell. But that's the whole game, is can they start to re-stimulate the economy without prices soaring back up? And then when prices were high 2 years ago, can they bring prices down without crashing the whole economy? They're trying to slow down the train, but they can't slow it down so quickly that we fall off the rail and fall off the bridge. They got to slow it down steady. So right now they're trying to speed us back up. Okay, we're going down a hill. They're trying to speed us back up, but they don't want to speed us up so quickly and too fast that we just start rolling down and we can't stop again. You guys understand the analogy? We're a train headed into a wall, and they're trying to get us to stop before we get there, and it sucks. Okay. So overall CPI, month over month increase was 0.2%. So on a monthly basis, the rate is still increasing. Food prices went up in September. Grocery prices and restaurants also saw a rise. Overall, the food prices have gone up by 2.3%, which is complete bullshit. But that's why I don't really like to see these reports and don't take them too seriously, because who in their right mind thinks that prices have only gone up by 2%? I'm still seeing an increase every time I go out to eat. I still haven't seen prices come down 1 inch. So energy prices fell about 2% in September, mainly due to a 4.1% drop in gasoline prices. So this is what we talked about earlier. Over the past year, energy prices have dropped at 6.8%, with the largest declines in gasoline and fuel. It's an election year. They're definitely no incumbent president wins if the gas prices are higher than when they got in office. There's like 4 or 5 key metrics that if you pass all of those things, the incumbent president will win. So the economy has to be doing about the same or better than when you took office. Gas prices have to be about the same or lower. War, foreign policy, et cetera, et cetera. Then you have to look at the poll numbers and public approval. There's like this whole thing. So gas prices dropping doesn't surprise me, especially in an election year, and they're sort of keeping that consistent. Core CPI, which excludes food and energy, is still up. Okay, and it increased by a 0.3% on a month by month. It's up 3.5% this year, 3.3%. Shelter went up. Okay, rent and housing are both up. And it's one of the biggest contributors to inflation. We see this. Medical care and transport, I've seen this. Airline fares jumped. Transportation has increased as well. And prices for recreation and communication dropped slightly in September, but that makes sense because the summer season is done. In order to get people back in, to the resorts, to fly, to partake in recreational activities when their kids are back in school and whatnot, pretty tough. So prices typically come down for these things. That's a seasonality effect. All right, that's the CPI report for anyone who's interested. Pretty good reaction here on NASDAQ. All right, back to the charts. Any questions, comments, concerns about the CPI report, its impact on the economy or on markets, anything that you guys want to know? Let me know. Put this off to the side for now. Let's see. He said, so CPI is bullish? All right, let's take a look at some of these trades that we've been covering for a while here. Euro USD, can I just add that the magnet indicator doesn't miss? Okay, now let me do that again. Thank you. Super secret magnet indicator can't miss. Undefeated, undisputed. 886 from the top rope all the way to the bottom. Beautiful reaction. Magnet TP1 smashed. We are headed potentially to TP2. Euro USD is running. I'm not trading CFDs and I'm not trading Forex at the moment. I'm trading futures, but I do believe that I took a paper trade on this with you guys just so we can track. And so that entry was, the fill price was at 1153. And right now we're at 1.09. So how many points is that? That's 75 plus 150. Is that 220 points? Or pips? Yeah, it's about 240, 250 pips since we took that entry. All right, pretty good stuff. And then we were also tracking the DXY because the super secret magnet indicator. We're tracking the DXY because the magnet don't lie. 100.855, that was the zone that we were watching. We did have a little kind of liquidity break below, but still under the overall weekly range. Always track the lows, people. Always track the lows. So 103.7 is that target. 105.7 is the next target. 107.5 is that next target as well. Is like the third target. We already tried this one time. Okay, we made it up to 103.7. Beautiful. Broke through. Created a new range. Okay, shot up, broke through the 105.7, came back and retested it as a new lower high. And then we came down and basically retested all the magnet zones on the way down. Now we're here for round two. And I want to see that third magnet get hit 107.5. Super secret magnet indicator. Can't beat it, can't touch it, can't fight it. That's how it's done. So is the magnet sitting at 88.6? Chris. Can't, you know the first rule of the magnet, bro? You can't, we don't talk about the magnet. You know, it's like Fight Club, bro. Don't talk about Fight Club. No, all jokes aside, I don't know how the magnet indicator works. It just shows up and the trades hit and it doesn't miss and it's undefeated and undisputed. So I don't know where it comes from. I have to climb up to the top of the mountain and fetch the water for the oracle. And she gave me the magnet and she said, take this and you'll make money with NASDAQ. And that happened, right? That happened. All right. USD JPY. All right. All jokes aside, USD JPY. Let's take a look at the weekly right here. This is another trade that we were covering together. Beautiful, beautiful kind of trend right here. We had the beginning of a range. This is kind of the local support. This is the start of this kind of bullish run right here. Beautiful retest of the super secret zone. It's not even that. I mean, if you've taken the class, you know. And then we already smashed TP1. And then now we're on the way steadily to TP2. Again, I'm paper trading these because now that I'm trading futures, I'm not holding trades through sessions or through the week. So this is more of the analysis that we were kind of just covering together. Did take the paper trade for education's sake. The fill price was 141.85. Okay, and then the last price is 148.5. I think that's like 700 pips, isn't it? That's insane. About 760 pips from that late entry. From the bottom, if you caught the bottom, it's floating at about 940 pips, which is absolutely insane. Oh, what's good, Mike? I'll stick to fundamentals just to understand where the market's going, just to understand where I'm at in the market cycle. But I was telling the squad today, like Gabe asked me about the CPI numbers. I didn't even check the CPI numbers until after I was done trading. I caught a scalp pretty quick and easy. Pretty quick scalp off the 15 minutes. Okay, hit TP1. I took a re-entry, hit TP1 again, and I was out. And then I checked the CPI numbers. Right there. All right, let's do gold real quick. Yo, tell me in the Zoom chat, what is this right here? Correct, Chris. Perfect. Which would make this what? Well, it was supposed to be which model? One, two, or three? Technically, it would have been model two, but look at the closure under the zone. No bueno. All right. So I was just lining up the Fibonacci with as many touch points on the chart that I can find. I think this is pretty solid. So the model three would be right here. So it would play around. It would try to test above the zone and then clear below. As soon as it clears below the neckline, retest, come down, and then this would be the buy area for the scoop all the way back up. So 2570. 2570 would be that zone. So if we're just going to take this thing in the local range where we're at, some scalping opportunities here on the smaller time frames. Okay, so we're clearly in this range. The market stays below the zone. There is a potential selling opportunity here. All right, so it's gonna push up for some kind of double top. So you would take sells at the top of this range. It would shoot up like this. And you can take that sell down into the range halfway through or a little bit less than halfway through. You can take your partial profits or take all profits. And then if it does come back to the bottom of the range for one more test, then you can just keep playing ping pong inside this range. All right. So a good place to aim for would be the bottom of this wick. So if it shoots back up, you sell here, take profits here, then take the rest of your profits at the low of this range. If it continues to climb up, then you would just fib down, find your zone right here. That'll be your target. And yes, did I just eyeball that 886 from outer space? Come on. Wait, body to wick. Come on. Did I just eyeball that perfectly? Stop. Bro, get out of here. All right. So that's about it. Markets have been pretty slow since. Well, now they're moving. Yeah, there was a lot of liquidity earlier this morning. As soon as the news hit, there was this massive candle, and then market open was pretty shaky as usual. Beautiful retest, and now we're getting that kind of 1120 to 1130 pump of volume. So there's liquidity pumps that happen like in 10, 20-minute spurts. So 11 to 1120, sweet spot, 1120 to 1140, another sweet spot, 1220 to 1240, sweet spot. So that's when we're going to see these big pumps, and then it kind of just resets and goes sideways. And yeah. So what I'm looking for now, because of what I just saw, would be a retest right here. Chris said, "Hey, Roy, hope all is well. Are you still doing Masterclass 2.0? Yes. Today is day 4. We've already had 3 days of the Masterclass. So the answer is yes. I'll see everybody tonight for day 4. Do I see it breaking all-time highs? Yeah. I don't know if it's going to happen now because I am looking for some kind of October surprise before the election. But if there's anything I know about the Treasury and the Fed being friends with Joe Biden and they're all Democrats and not big fans of Trump, um, pretty good chance that they don't do anything risk. It's not like they're in the back controlling the market. But what they are doing is they're not going to do anything risky that's going to get in the way of a bullish market. They're not going to start to raise rates or do anything that could potentially mess up the market conditions, at least for the next month and a half. So between now and the election, I could actually see the markets continuing bullish, and then we might have some kind of retest once the election's over. For me, I just see the markets as tension and relief. So basically, right now, there's some uncertainty about what's going to happen. We are certain that no matter what happens from here, the Fed's going to cut rates and not raise them. Because if we go into a real recession or if people keep losing jobs, Fed's only going to cut more aggressively. And if everything is stable and the economy is stable and employment's starting to stabilize, then they can just keep cutting rates regardless. So cutting rates, I think, is that like guarantee. I don't say there's no guarantees, but that's the consensus right now. And that's what the markets are betting on right now. The next 6 to 8 months, we're going to keep cutting rates, and crypto and stocks and everything is going to keep pumping. Right? Are we going to see a couple of weeks of retracement? Maybe, but I do think the markets are forward looking enough to see where we're headed. All right, I'm going to catch you guys later. Put up your alerts, your potential entry zones. Potential entry zones are marked. Okay, now we are at a higher time frame sell entry. So if there's going to be a retracement, I'd like to see it from here. Again, the markup from last night was this higher time frame sell. Here, I drew my fib. We have broken through the sell zone. And like, look, we're still creating a lower high. Okay, so we still haven't technically broken above the high yet. Or we haven't closed above the high yet. So if we're just going to go top to bottom. You guys see how we're retesting that zone right here? That's why there's no buys at that zone at all. If there's going to be any buys, it's got to be as close to the bottom of this range as possible. All right. Or ideally below. Like ideally we come in for some kind of retest here of this range. Okay. So that's that higher time frame sell level. Do I want to short it again? Personally, no. There was already this beautiful kind of short earlier, but if you guys know how I trade, here's the Asia session range. We had a slight break above, right when the news dropped, break that below. So the only thing I'd be looking for is the next move to be bullish. Thoughts on Israel starting World War III? Oh God, dude. This is what we get for having trash leadership in America right now. And this is really what we're going to have with Kamala Harris, because Joe Biden doesn't have the wherewithal to get out and tell the kids to stop fighting, which is really America's job. We're not the policemen of the world. We're like the kindergarten teacher sometimes. So America really should be the one to step in and say, I don't give a fuck what you want to do. You're both going to sit at this table and cut this shit out, because now it's spilling over to everybody and no one wants a world war. And I understand that every country is going to give the same excuse. We are a sovereign nation. We have the right to defend ourselves, et cetera, et cetera. Do you want to beef with America? The whole reason why Israel is emboldened to do these things in the Middle East is because of the support of the U.S. Obviously, they don't want to beef with the U.S. No one does. So if America tells everybody to sit the fuck down and end this shit now, they can, but they're not. You understand? And I don't give a fuck what side of this thing you're on. This is not going to resolve. This just basically pour gasoline on the fire for the next 100 years. Because for every, child that you kill, their entire family now becomes combatants. But if I'm sitting in my house and a bomb drops and 3 of my children are now dead, my wife is dead, I'm sitting there in that rubble staring at that shit. Y'all have seen John Wick. Y'all have seen John Wick. We would all become John Wick. How many John Wicks did we fucking create out there? Now, these dudes can't shoot like John Wick. Nobody, you ain't shooting this rusted ass AK like John Wick. But you guys get what I'm saying. We've all seen Liam Neeson in that fucking movie. You know what I'm saying? So what do you think is going to happen? 2 of your cousins are dead. You got mothers and your mothers, aunts, everybody in your family's crying. Everybody's devastated. Your entire society is now collapsing around you. You picking up the gun or not? For every 1 person you kill, you got 3 to 5 more people that become combatants. That they get radicalized. Bro, how is that radical? That they're not radicalized. Fam, if somebody pulls up to your country and they bomb your house, or they just shoot it up, whatever it is, your whole family's dead. You have to see your son with his leg blown off. He's 8 years old, leg blown off, and he's just sitting there asking for help, praying for help, and you can't do nothing. You're just sitting there watching that shit happen. How is that radical for you to be to be hateful or angry towards the people that did that? The fuck? If you don't get mad at that, there's something wrong with you. So that's not radical, bro. This is human nature. That's why this is so fucking stupid. Because what do you think is going to happen? No, I get it. I'm saying like their argument is they're trying to, what is it called? They're trying to gaslight them by calling them radicals or terrorists or whatever it might be. When, brother, if you had never been in this war before, you had no interest in conflict, you had no interest in participating in the terror or none of that, bro. You're just living in the society. You're not with gangs or any of that stuff. And then all of a sudden on a Tuesday, your kids get bombed on the way to school. If I wasn't in the conflict until then, bro, now I'm in. Now I'm 100% in. So the longer that these things continue, the worse it gets. Ukraine, Russia is a little bit different because all of the Ukrainian men are now dead. There are millions and millions and millions of Ukrainians that are displaced. That country cannot rebuild. It's become what is it called? A bidding war between BlackRock and Vanguard and Halliburton and some of these other companies to get contracts to rebuild these countries. So they're funding the wars to keep devastating this place so they can buy more and more real estate. It is absolutely devastating. So America, if they were to step in, could get Russia and Ukraine and force them to sit down. We could end this thing. That's why when Trump said I could have this conflict over in a day, and then these fucking retards on the media are just like, how does he intend to do that? How does he intend to do that? Look, I'm going to say something real disrespectful. Bro, these anchors that are making 40, 50 grand a year on these news stations, reading off a teleprompter, are in an empty studio with a big screen, 4 people that hand them a script, and they just read. And they just read. And if they don't, they don't believe what the fuck they're reading, they're going to sit there and convince themselves they believe it. It's like a sports commentator. I don't give a fuck what the people on the news say, but they'll sit there and clown Trump as if Trump hasn't negotiated some of the largest deals in America for some of the most rare places of real estate that everybody in the world would love. Saudi princes and Russian oligarchs, people who get whatever they want, wish they could get those properties on 11 Madison and there's some of the Trump towers and some of those real high value real estate deals. How the fuck did he get those? How did he make peace with North Korea? How did he go there and make peace or basically put pressure on China without starting a physical war through tariffs? How did he make NATO pay up? These people are saying that he can't fucking make a deal. America has the power to do it. The thing is about weak people is they always need to use the guns. They always need to show their strength because they're insecure. Kamala Harris is an insecure person. She does not have confidence in who she is as a person. That's the kind of person that'll drop a nuke just because they're scared. You guys understand what I'm saying here? And so if you have strength, you know that America could basically nuke the world if we wanted to. You know we have superior equipment. You walk in there and force them to sit down through peace, through strength. But if you're an insecure, scared fucking shell and hack like Tim Walz, they'd be like, oh my God, just bomb them all. That's what the fuck they want to do. Strong people don't kill kids. You guys get where I'm going with this? So we need a strong leader. Otherwise, we're literally fucked. When I say this is the most important election, go register to vote. Register to vote, register to vote, register to vote. I don't give a fuck what you're voting for, but go register to vote. This is one of the most consequential elections of our entire lifetimes. And they say that every time, but the 08 election was very important because I think no matter what you thought about Obama's policies, he was obviously a warmonger. That's inexcusable. But the hope that the country kind of had around that time was exactly what we needed to get out of the 08 financial crisis, because nothing makes things worse and gets us in a depression like a lack of hope. So that was necessary at the time, but those policies could only get us so far. All right. 8 years later, we sent all of our jobs overseas and we completely devastated the US economy. Started a bunch of conflicts or exacerbated a bunch of conflicts, whatever. The drone wars are getting out of hand too. America cannot put countries in debt if they stop wars. Yes, the fuck we can. You think war is the only way that America can put countries in debt? Are you out of your mind? It's because the military-industrial complex and the national security establishment is so pervasively influential in our government. That's the deep state. That they're the ones who are getting all the benefits right now. Plain and simple. We can put countries in debt just because of the strength of the dollar. Everybody needs dollars in their bank accounts in order to give their local currency value, whether it's the euro or anything else. Even those sovereign currencies of the G7 countries. You're looking at the yen, you're looking at the pound, the euro. Everyone needs a mix of foreign currency basket in their central bank reserves in order to basically hedge currency risk. And also, if you're a developing country, your currency is worthless on the global stage. Your currency is completely dog shit unless you have dollars in the bank that you can back your currency with. Most of the debt in the world is dollar denominated. Oil, the petrodollar system, for fuck's sake. That's how America became the #1 country in the world. Taking over all oil trade is settled in US dollars, and we protect that with the US military. And if somebody tries to sell oil behind America's back and they try to do it in their local currencies, you get put out of business. Right? Saddam Hussein, Shah of Iran, Gaddafi, Mubarak in Egypt. Try to play stupid, you don't get got. That's why we've been in Afghanistan for 20 fucking years. That's why we don't like Iran. It's always about oil. The petrodollar system is what gives the dollar its value through the settlement of global trade in dollars. Now, most of the debt that's outstanding in the world is dollar-denominated debt. So yeah, we got him by the chokehold, and we don't need wars. That's why Trump didn't start any new wars, but was able to clear up a lot of bullshit for America, make some of these European countries pay up their fair share. These countries were rigging the fuck out of America. We're paying them. So every country is supposed to pay at least 2% of its GDP on their own protection. These European countries were paying less than 2% of their total GDP on their own security. We spend about 20% or 30% or something atrocious of our national GDP on security and defense. No, I think it's like 1.6 trillion. GDP, I think, is 30 trillion. I think we're spending close to 5 to 8% or something. And we're protecting all of them. So, and then they're taxing the shit out of us for any American good that we try to import into their countries. And then we have very low taxes on all the cheese and all the bullshit they want to export and all the German cars they want to export into America. That's why there's so many German cars here. You can see Audis and BMWs and everywhere you go. So Trump was like, fuck that. Look, either pay up at least 2% of your GDP and your for security in the NATO agreements. All right. And you're going to reduce the taxes on all the American made goods so American manufacturers can start to export more and we can bring some money back home. Like, that's like, bro, how the fuck can you hate on Trump's policies? This shit is crazy to me. He said, should we start thinking about moving to another country? Brother, um, leaving America is stupid. The American ideal is the most sustainable, I would say, model of civilization. Now we're so young in this game, bro. We still need time to work out all the kinks. You feel me? Like if you look at America's age versus everybody else, if China and Russia with their, 1,000-year history, and Iran with the Persian Empire, and Turkey with the Ottoman Empire, these people have 1,000-year histories. America's about 300 years old. So we're in like the middle school phase. We're like a toddler. Right? And so, we're gonna need some time to get through these kinks. Do I think the next 3 years are gonna be an absolute shit show in America? I think so, just at least socially. I think there's gonna be a lot of bullshit the next 3 years. And so if you want to go take a sidetrack somewhere and then come back, if shit pops off, probably it might not be the worst idea. But leaving America altogether, bro, where are you gonna go? Give me one country you would go to that would be better than America. Because I'll tell you, those 20 million illegal migrants that pulled up through the border, they didn't go to China. They didn't go to Russia. They didn't fucking stay in Mexico. That's for damn sure. They crossed 15 countries between Venezuela and America, and they didn't stop at a goddamn one of them. Let's just be honest. Everybody here who's an immigrant like myself, our parents did not flee our country and go to France. Some people did. He said Thailand. Thailand's better than America. How? When everything is straight, yeah. If China, bro, if America loses its power and China wants to turn on its neighbors and just grab everything in the way, they will. You think Thailand's going to protect itself or has the ability to protect itself against a hostile neighbor or any of the hostile neighboring countries? Fuck no. Thailand is cool. Everything is cool when it's safe. But when shit pops off, America is one of the best places to be. At the Second Amendment here, goddammit. All right. I got to hop off. Ladies and gentlemen, happy and safe trading. Catch you guys tomorrow. Take it easy. Peace. All right, members, I do have to hop off. I just noticed the time. I got to go for a meeting. I'm pretty sure I'm 1 minute late. Take it easy, y'all. I'm going to catch you.